And even though the move today was upbeat, there are still, of course, a number of global hotspots that investors are keeping a close eye on. Pisani has more on that from the New York Stock Exchange.
Beyond the U.S.-China trade war, there are a handful of other geopolitical risks still outweighing on the global markets. Hong Kong, for example, is grappling with a 10th straight week of violent demonstrations with thousands of anti-government protesters storming the region's airport for a second day in a row. The protests have taken a toll on the Hong Kong stock market, down roughly 14% since the start of April. We're seeing a lot of big names in that region lower today, like Macau-based resort and casino operator Sands China, as well as Hong Kong airline Cathay Pacific, which is now down about 14% for the year. Investors are worried about a longer-term conflict between Hong Kong and Beijing. We did see U.S. stocks come off of their highs today when President Donald Trump tweeted that China is moving troops to Hong Kong's borders earlier this afternoon. Italy and Argentina are coping with populist fights, with Italy's government teetering on the brink of collapse, and Argentina coping with current President Mauricio Macri's poor performance in the primary elections. Argentinian stocks plunged almost 50% on Monday, one of the worst declines the world has seen in decades. And let's not forget about the UK. They're still struggling to avoid a hard, no-deal exit from the European Union, or Brexit as it's called, by the end of October. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.